Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com, and today we're going to have a look at the 24th COT report in 2014. As usual, we're going to start off with the changes in commercials positions. So here we go. Dollar index on top of our list with a 48% change in commercials positions. We've got 48% change in New Zealand dollar also. But if you look at large speculators, the changes over there were even larger. On this 1 year's chart, you can see that we had very large changes in the past. The last major change, I would say the second largest change, was back here in 2013. You can see it was actually a bullish COT change signal. Not really good timing. You can see the prices have actually declined further. Then we have a actually pretty decent sell signal over here, which, as you can see, was effective. Then we've got another bullish COT change signal, maybe coming a bit late, but still usable. If you look at the chart, prices did actually go higher from there. So large changes in the dollar index, that's for sure. It is a bearish type COT change signal. Judging by the past movements, there's I don't want to say percentages, but I mean it's the COT change effectiveness in dollar index does not seem to be that good, as we may see in other markets. Let's move on and have a look at the 5 years chart and see how extreme the dollar index is. Here you go. You can see that we actually had this bullish extreme not long ago. Not an all-time, but definitely on this 5 years chart, we can see that it was much closer to the bullish extreme side of the report. Now we've moved away and actually pretty rapidly from that level. So we did not reach a bearish extreme yet, but basically the dynamics by which traders changed their positions is definitely dramatic. So I would say that this last major extreme, which was a bullish one, should be still in effect, and until we reach, in case of commercials, let's say about 50,000-60,000 contracts in that short level, we cannot really talk about a bearish extreme. Okay, let's move on and have a look at the New Zealand dollar, where of course we have an opposite change signal. Obviously, we're talking about the New Zealand dollar against the US dollar. So we have a bullish COT change signal. We've never seen such a large change in traders' positions on this 1 year's chart, so that's pretty new to us right now. Prices have gone higher, so having this bullish change signal at these levels may just support that this rally can continue. Again, moving on to the 5 years chart, let's have a look at the wider time frame and see how extreme this market is. Here you can see that we were closer to the bearish extreme side of the market. There was, of course, still space left to become really extreme. I'm talking about all-time or close to all-time extreme. We are moving away from those levels. We have not reached bullish extreme levels yet. I would say that we need to reach at least the net zero level or above in case of commercials to talk about a bullish extreme in the New Zealand dollar. Okay, moving on to silver, where we have this 24% change in commercials positions, 33 in large speculators. Of course, you may have been here at my two reviews ago, maybe the last one also. I was talking about this extreme that we had in silver, which wasn't an all-time, but was definitely a extreme to talk about. And you can see that prices have actually moved higher from last week, from 2 weeks ago. So we're not surprised seeing this bearish COT change signal. That's actually pretty natural when there's a trend change and there's a rapid movement in one direction. So I wouldn't give too much influence to this change signal. It may actually push prices back in the near term, but in the longer term, I would say that this bullish extreme that we had could push prices higher for the next few weeks. And let's move on and have a look at large speculator COT Extreme. Here we go. We've got crude oil on top of our list with all-time extremes, both in large speculators and commercials. Also, we have 115 report extreme in small speculators. So we are talking about all-time extremes. There's no better way to say that. Of course, it is a bearish COT extreme signal. We are expecting prices to reach a top. Judging by the past examples, I would like to show you a few. You can see how well these extremes pinpointed these tops. I'm of course showing you tops right now, so bearish COT extreme signals. So it's something we're expecting to happen again. Of course, never forget, all-time extremes can be present in the market for many weeks before prices react, but it's definitely a signal, a warning signal that you should have your eyes on this market and possibly consider a trading opportunity. British pound, our next market, where we have a 340 report extreme in large speculators, 359 in commercial. So we're talking about large extremes also in the British pound. Let's open a 5 years chart to see this extreme. Here we go. You may see that the extreme is definitely considerably large. We are expecting prices to top out soon. Of course, question is if we have this a bearish signal in the dollar index that we talked about. If the dollar index does react to that signal and we see a bit of a decline over there, that's obviously going to affect the British pound also. But none of the way, anyways, just, you know, extreme is there in the British pound, and it's something that we should be aware of. Maybe not in a few days, maybe only in a few weeks, but we are expecting prices to react to this really large extreme that we have in the British pound. And then moving on to our last market, coffee, where we have a 327 report extreme in large speculators. Let's open the 5 years chart right away and see what that wider time frame tells us. Well, actually, we've stayed at this level for the last couple of weeks, month now. It is a unquestionable bearish extreme that we have. We did see prices react. So after this considerable rally that we had in basically the beginning of this year, prices did actually lose some size, and prices have gone back down. We need to see this extreme go back, commercials going back towards the zero line, which would eventually mean prices can actually continue their decline mode for some time. The extreme is definitely there. It is a bearish extreme, possibly pushing prices even lower. Okay, that's going to be all for this review. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.